Today I will be teaching you guys step by step how to create a dividend stock portfolio with only $1,000. Let's get into the video. In this video, you can expect to learn the pros and cons of dividend investing. You will get to see a sample portfolio that I have set up, and then we will be going over dividend reinvestment. If that sounds good to you, then let's get into the video. So the first pro of dividend investing is going to be consistent income. This is basically income that you'll be paid out monthly, quarterly, or even yearly, and you can pretty much rely on the stocks in this portfolio to always be paying out their dividends, so you'll be getting consistent passive income. The second pro is going to be consistent growth. These companies are normally pretty slow growers, but you can pretty much consistently rely on them to go up a certain percentage every year. The third pro is going to be that you know that these companies are profitable. When you're investing in a dividend stock, these companies pay out a portion of their profits. So you already know that this company knows how to turn a profit, and that's basically the whole thing about business. You need to be able to turn a profit, and these companies have already done that. Now for the cons. The first con is that there's probably not going to be as much growth. Like I said in the pros, these companies are usually slower growers, so you're not going to be able to get 100% returns in 1 year with these stocks. Most likely there are some stocks that can return that much depending on the year it has, but most of these companies are going to be steady but not growing at a crazy rate. The second con is that the company is paying you a portion of their profits, so they can't reinvest these profits to better their own business. This is why companies such as Amazon have such great returns, because they don't have to pay a portion of their profits and they can then reinvest it into their business to make the business better. But that's going to be it for the pros and cons. Let's move on to what a dividend aristocrat is. So a dividend aristocrat is a S&P 500 stock that have increased their dividends for at least 25 years straight. Here's a list of dividend aristocrats. You obviously will probably know most of these names because they are huge names that have been able to stay a profitable business for at least 25 plus years. Now you have to do a little bit of weeding, and you don't want to just invest in every single company on here because some of these companies might be in a better financial situation than others. And now that'll lead us into our sample portfolio. For this sample portfolio, I decided to pick 5 stocks that I would put $200 into each stock for. For this sample portfolio, I tried to get diverse stocks that were in different sectors so that you're covering a lot of the market. So if one sector goes down and another goes up, it'll pretty much cancel it out and you'll still be getting paid those dividends. So the first dividend stock for this sample portfolio is going to be Coca-Cola, and this is a favorite by a lot of investors, including none other than Warren Buffett. They have seen 59 consecutive years of dividend growth, making it the 5th best company on the dividend aristocrats list. As you can see here, they pay a 3.10% dividend yield, and basically what a dividend yield is how much you're going to be paid throughout the whole year. So say you put $100 into it, they have a dividend yield of 3.10%, you will get $3. Say you put $1,000 in, you'll get $30. If you put even more than that, $10,000 in, you will get $300. It all depends on the dividend yield. They have a profits to earnings ratio of 32, which is pretty low and good for a company of Coca-Cola's size. They pay out their dividend on a quarterly system, so that means that you'll be paid out every 3 months, about 1/4 of the dividend yield, so about 0.8% every 3 months you'll get paid out of that dividend yield. Now I'm going to come here to my dividend tracker. So sadly, this is actually not free. I got this from Andre Jick. He's an awesome YouTuber that I follow, and you have to subscribe to his Patreon to get this dividend tracker. But I figured I would plug in this sample portfolio to here so you guys can get a visualization of how much you get paid out. So for Coca-Cola, if you put $200 in at the average cost right now, you would have 3.6 shares, an annual dividend of about $168, and then you would be getting paid out $6 every year just for holding $200 worth of Coca-Cola stock. For the second dividend stock that we're going to be adding to this sample portfolio today, we're going to have O, ticker symbol O, or Realty Income. So Realty Income is actually going to have a 4.19% dividend yield and a PE ratio of 70, which is not too bad. It's a little high, but for a company that has seen a good amount of gains recently, it is pretty good. As you can see here, they have 95 consecutive quarterly increases to their dividend, and then 611 consecutive monthly dividends paid. They actually pay out monthly, so you'll be getting paid 12 times a year with Realty Income. As you can see here on our sample portfolio, if you had $200 in, you get an annual dividend of about $2.83 per share. So that would come out to about $8.38 per year for holding $200 worth of O stock. For the third dividend stock that we are going to be adding to this sample portfolio, we are going to have Exxon Mobil. Exxon is in the energy industry, a pretty good industry to be in at the moment, and then they have a dividend yield of about 5.51. Now their dividend yield actually goes up and down. I've seen it as high as 9%, I've seen it as low as 4%. Right now it's about 5%, but it's kind of a variable, amount, just like everyone else's. As you can see here, Exxon Mobil actually pays out quarterly as well, so you'll be getting paid 4 times per year. If you take a look here, with $200, you're going to be able to get 3 shares, about 3.1 shares, and if you had $200, you would actually be making $11 per year just for holding $200 worth of Exxon Mobil stock. For the fourth dividend stock that we're going to be adding to this sample portfolio, we have Walgreens Boots Alliance, and actually they just had an earnings call that didn't go too great, but it was still nothing too bad, and so they went from about $52 all the way to $48. So I see a lot of value here with WBA being down 7%. Their dividend yield is at 3.88%, and their PE ratio is super low at 18. So that is good value you're getting if you're going to get into this stock right now. As you can see here, they also pay quarterly. That is what you're pretty much going to see for all of these stocks. All these stocks pretty much pay quarterly, so you're going to be getting paid out 4 times a year. If you put $200 into WBA stock, you would be getting about 4.15 shares, and you would be getting about $7.76 per year annual income for holding $200 worth of WBA stock. And for the final dividend stock that we're going to be adding to the sample portfolio, we actually have Target stock. They do have a very low dividend yield, but this is in here for kind of more consistent growth. As you can see, over the past 5 days, 2% growth, 6% over the last month, 6 months, 30% growth, and then over the last year, 100% growth. They do have a smaller dividend yield, so you're going to be getting paid out a lot less, but their PE ratio is still 20, so this Target is still very good value here. Just like most dividend stocks, they are also paid out at a quarterly rate, so you're going to be getting paid out again 4 times per year. If we come here to the dividend tracker, $200 is actually only going to get you about 0.8 of a share. Most brokerages actually do fractional shares, so that shouldn't be too big of a problem. WeBull actually just started doing fractional shares, so if you guys want to start doing fractional shares on WeBull, go ahead and use our link in the description. But yeah, they have an annual dividend of about $3.60, and that is going to be 1.46% of the yield, and you're only going to be getting about $3 for holding $200, but this is in the portfolio for more growth. If you were to invest in this sample portfolio right now, you would have an annual income of about $36 for just having $1,000 invested in this portfolio, with a yield of about 3.63% on average. The final thing that we're going to be going over in this how-to video is going to be dividend reinvestment. So obviously you could just take these dividends as income and use it however you like as passive income, or you can actually do dividend reinvesting. Basically what this does is it takes the dividends that you get and actually just reinvests it right back into that stock. So you're going to see a lot more growth in your portfolio this way if you do that, if you don't actually need the money and you just want to grow the portfolio so that you can have more dividends in the future. But that's pretty much going to be it on the how-to guide on how to start dividend investing. Did I miss anything? Leave a comment in the comment section below if I did, or if you have any questions, I will be more than happy to answer those for you. Thank you everyone for watching. If you found any value in this video, I'd like to ask you guys to please like and subscribe, and consider turning on post notifications so you never miss a video. I really hope to see you in our next video. My name is Zach, and I'll see you in the next one. Peace.